Welcome back to episode 12 of VDub Exchange. We got a full docket for you, James. How are we doing?
Doing good, Adam. Doing good. Coming up on the week before the 4th. Getting into the heart of summer. It's been nice. And yeah, we got some good market stuff to talk about today, if you want to lead the way.
Yeah, revamped. I thought that we'll just get right into it on this first story. This was a piece from The Economist basically talking about the nothing ever happens market and just how event after event seems to happen, and I think that this war in Iran would be a big one, but seems to be that the market's pretty satisfied that Trump was able to get a ceasefire. People are able to just wipe their hands and pour money back into the markets, and people have been living with that for the time being. And I thought that that is just a an interesting trend, and I'm sure you got some thoughts on it.
Yeah, it's very interesting kind of seeing this unfold. I heard one person say that it almost feels like the market's just completely ruthless. They don't care about what's going on. They don't care about what war is happening, anything that's breaking out. They don't care about. Um, we saw with when tariffs were initially rolled out, we saw a huge pullback, the quickest bear market like we've ever seen. It's already rebounded. The S&P 500 just closed in a new high on Friday at 61.73. So it just seems like it just keeps ripping, and we can kind of speak to some of those catalysts. But yeah, it is kind of insane how quick it moves.
And I would be interested to see too if like looking at stock performances during wars versus like peacetime and see like how the market does in comparison. Because I wouldn't be shocked if that stocks just trade better in wars than they do when we're not at war. And I think that that could be a total possibility and just worth maybe looking at.
Yeah, I mean, war can, in a way, be profitable. In World War II, it was for sure, and raises some questions, but it is something that can sort of be profitable as absolutely horrible as it is. But we'll definitely look into that in the future. I think that'll be something cool.
Yeah. And I would just say like last thing I would say on this is like seeing headlines like this always like make me wonder if there's ever just like a mispricing of risk. If there's ever that like things are just too good and just nothing ever matters, that like I feel like at some point one of these events has to like pull the rug out from under you. In I would say geopolitically, because I think that I mean I think that this headline here is right that I like had the quote like the matters that tend to affect the economy most come from like the financial system, not like the world's battlefields. And I think that that like certainly in 2008 is like a really good example of just something that kind of came out of nowhere. But I kind of wonder if there's ever just this is just seems a little too peachy to me. I don't know.
Yeah, it seems like there's going to be one event or just something happens, if something unwinds, it's all going to go with it. Um, Not to say that these haven't been a lot of extremely impactful events, but if there is one thing that tips over the edge, and like you were saying, I think that definitely could be geopolitical tensions that'll just maybe pull back some of these high valuations we got. But for the time being, it does look like prospective corporate earnings are, of course, what's going to drive our market, and it reflects good behavior.
Right. Right, and I think that even on the home front, by having such a tech forward economy where everything is data driven, everything is like AI driven, which like doesn't really need a physical factory, or it does, but once we have like this software and we have like stuff in the cloud, it seems like that there are no bombs that you can drop on it. So I think that that is maybe another thing that makes it just even more durable.
Yeah. And of course, when we got to talk about AI, we're talking about employment as well. Wall Street Journal just came out with a good article, and they quoted that flatter is faster. So basically saying that hiring isn't the same way that it once was. You don't need this entire giant workforce to build your company and grow and maintain earnings. Today, you're seeing much smaller companies. Um, I know this one quote we had here. hiring is not necessary like it used to be. 10 years ago, it would be really difficult to build a $50 million business with five or less people. Today, it's going to be really, really common.
Yeah, that's stunning to me. Just in my mind, 5 million people, $5 million split among five people running the company. That you show up to this company and they got a couple tech bros sitting in the office twiddling away. It is kind of it is just kind of a whole different reality that we're stepping into, that with like some of these AI platforms and with just really tech forward companies that you can do so much with so few people. And it really kind of raises the question for me of like when we look at these job reports and we see, oh, the US is adding 100,000 plus jobs, that where are these jobs coming from, and like who is picking up the hiring? Because it seems like from this article that among the S&P 500s that it seems like we're net going the other way.
Mm. Yeah. Um, like you said, that's good stuff. And something else I wanted to bring up while we have this here is Amazon's recent letter, just kind of talking about AI in the workforce and how they are such big believers in it, and they kind of seem to be in a way driving these AI efforts, and they're what a lot of people look to. And if you have one of the world's largest companies saying things like this, it's only a matter of time before everyone does this, and it is going to be a different reality, and it does move so quickly. Um, I don't know. Any thoughts on your end, Adam, with that?
I think that one thing I would say that I think is interesting, just in like thinking about this from like a wealth inequality point of view, is that like with like these top firms like Amazon, but like S&P 500 companies, that they're the ones who are laying off employees that are white collar, six-figure salary employees, that those are the people who are bearing the brunt of this. And I think that that's kind of just interesting in general because we usually think about the wealth inequality gap as something that's getting worse. But here it seems like that things are kind of moving against white collar people who just sit at a screen all day and not against plumbers or teachers or electricians, people doing more blue collar stuff.
Yeah, that's something really interesting we're seeing. It's a lot of these corporations, when it really gets broken down into it, a lot of the firings are coming from middle management and executives, which is, you might think it might be the lower level analysts who are just kind of plugging away monotonous sort of work, but it's actually some of these managers, which is really interesting. And whether these companies are actually replacing their positions with AI or using it as an excuse to, they, these middle management people do make a lot of money, and they're finding ways to trim that and improve their bottom line.
Right, right. And I kind of wonder too, um, like these days AI products, like what is going to be the net output of this of Gen AI? And like in Amazon, they speaks like so glowingly about how this is going to be better for the consumer. It's going to be better for the workforce who is going to have access to all these AI tools and they can just think pure strategy. So it seems like that there's so many positives that are coming off this thing, but the only like really important negative is that because you need to lay off so many people, it's just like not a clear funnel for where all these people go.
Yeah, that's the million dollar question. What's going to happen? Is it going to, I've seen people say it's going to create jobs. Maybe, as you were saying, it's going to magnify your current positions, but I don't know. I want to put it on to you. What do you think is going to kind of unfold from this? What is the best case scenario maybe? Or where do you hope for it to get to? What do you hope for it to do?
Um, what I hope for this to do is just be a really big snowball that will like really amplify earnings and really make the S&P 500 continue to go on a big run. And what with that I hope we'll do is there's going to be a lot of earnings that is just going to stimulate more hiring, and those people are going to be AI fueled in their productivity, that they're going to be able to generate even more earnings for the company, and like that this is going to continue to go in a super positive direction. But I kind of fear that with this agentic AI, like these AI agents, if this becomes like a real thing and you can just totally snip out the person, it's not like AI amplifying people. It's just AI. You just send your emails over to the AI and they'll get back to you in 10 seconds, then I think we're in a tough spot.
Yeah. Yeah, we can be hopeful and but unfortunately, I guess it's not going to be exactly what we're looking for, but it is at the end of the day likely going to drive earnings, and that's the expectation in the market right now. But something interesting that we kind of saw unfold from the market, at least in this last sort of rally, as trade tensions kind of sorted themselves out. Um, Trump saying that investors believe that he's going to take a more conservative stance on some of these tariffs. We've actually seen companies outside of the Mag 7 doing well and doing a little bit better than they had in the past. A big concern today is the over concentration of the Mag 7 and these high multiples that they're trading at and how they're carrying um, the entire market. But we actually saw that a lot of like value stocks did really well, and a lot of these companies in different industries. If you were to guess, Adam, what um, I don't know if you saw this or not, but the company that had the most growth in that period since the last high in February, do you have any idea what it might be
The most growth. Oh boy.
in terms of just
Uh,
stock market performance?
Let me guess, like, I don't know, it's been really hot. Maybe one of these people are providing AC or something. Maybe like General Electric.
I like that. Like it's actually Dollar General.
Whoa.
Yeah,
Oh.
yeah, retail, right?
Yeah, I don't know how to piece that together. That that
I
doesn't
don't know.
to me.
I don't know either, but it's reflective that some of these companies outside of the Mag 7 are doing really well, which is a great sign. It's positive market breadth that we have going on. It's not just powered by these few companies, and it's an overall bullish case for US companies when a lot of investors recently have been fleeing to international markets.
Right, right, and yeah, it's kind of interesting, like where we go from here, because like I threw up this graph of just like a decade by decade split of like how the S&P 500 is made up of what they would consider growth stocks, value stocks versus value stocks, high dividend stocks, and like that gap has just continued to kind of widen. So it's an interesting question. I think that there's just so much of an emphasis, and we've seen tech stocks just continue to go on big run after big run. But at some point, it can I don't know if it can only go so far. But at some point, value stocks become so cheap that you just can't buy the thing because at the end of the day, all these growth stocks do have some risk attached. And if you are a senior citizen, if you're an elderly person, one of these tech stocks is certainly riskier than a Procter and Gamble or Walmart or Colgate Palmolive, whatever. So. I threw up the question here of like when is the time to rotate into value stocks? And I think that is just kind of continue to be a gradual process. I don't know.
Yeah, I mean, when we're kind of looking at how concentrated these value stocks are in S&P 500 and kind of that decline, I think it just makes value stocks more attractive. Of course, you talk about today, everyone's obsessed with buying the dip and finding value, just like Warren Buffett. And you can't go wrong with some of these stocks that are just so mature and continue to pump out great earnings. And it doesn't, I saw some good advice, basically saying that you shouldn't let the market change your portfolio allocation. You should let your personal goals change your portfolio allocation. So what that kind of means is that you should always have exposure to these value stocks and judge your risk based off the point of life that you're in. If you're approaching retirement and don't want to take your chance on a AI startup, then maybe go for some safer companies. But at the end of the day, I do think that we shouldn't necessarily shift too much. And maintain a balanced exposure.
Absolutely. And speaking of value stocks, might as well pivot into REITs, where we had some interesting news here with and I was super shocked of like how national a headline the Mamdani story was of him winning the Democratic primary over Andrew Cuomo, who had a lot more name recognition coming into the fight, and just was able to pull ahead. And that was a net negative for New York REITs, Vornado Realty Trust, SL Green, both down almost 4%. Why did this happen?
Yeah, so I mean, it's been a very busy week in that regard. Like you said, I was also pretty surprised with the outcome. Cuomo had all the big backers, and I feel like Mamdani just kind of came out of nowhere. Like overnight, he blew up this huge social media presence. But the reasoning for this is because he is kind of pushing for rent control. He's calling for rent freezes in New York City, higher taxes on the wealthy, and even government-run grocery stores. So, real estate market and the entire market in New York City is kind of drawing a lot of questions right now. In terms of rent freezes, you know, these rent control regulations are might not allow landlords to bump up rents, and if if these landlords continue to see rising costs, then they might not they're going to see lower NOI and struggle to produce results. And you also have to worry about potentially corporate headquarters leaving New York City to and other wealthy individuals. And so there's a lot of questions there. And something that I found was that SL Green, 96.6% of its portfolio is in Manhattan. And for Vornado, 75% of its total square footage is New York City based. So heavily exposed, and this is a real threat to them.
It is, and rent control especially, that is damaging to REITs. REITs make money by raising rents, by collecting rental income, and they also get money by leasing new space and bringing in new tenants, new companies who want to come into New York, new residents, potential employees who want to lease up an apartment space, and they need those people to come in. And people are worried that this is going to be a less business-friendly environment, a higher tax environment for individuals, for corporations, and are wondering if they're going to stay. So I think that that's kind of a big reason why people are really hesitant here, but obviously still need to kind of wait and see if he actually takes the full election home against Eric Adams, and I think Cuomo is also going to be running as an independent as well. So we'll see what happens with that, but yeah, this is certainly an ominous sign for real estate.
Yeah, and it's tough too because we just saw a really great bounce back in New York City in the office market, and multifamily's been doing really well. So this really does kind of raise a lot of questions, but I've also seen some people say this could be a buying opportunity. And I kind of wanted to ask you, what do you think is driving the optimism still in this market, and why do you think people are still bullish in the New York City market? Is it because they don't expect him to win the full election? Is he not going to be able to create as much change as he might promise, or what do you think it really is?
Um, it's a good question. I think that where Mamdani I think would come in would really be on raising rents on it or creating rent control for multifamily, for apartments, for more everyday New Yorkers. What I don't think is going to be priority as far as rent control is going to be how much rent Blackstone can pay its landlord at 345 Park. I don't think he really cares. So I think that office REITs like Vornado, and I think SL Green is also overweight office. That they're probably not going to have a lot of trouble continuing to race around these folks, and we'll see. Mamdani claims that high income residents and these firms who are making a lot of money, that is a real pain for them to move around. It's a real pain for rich people to get up and go somewhere else. But we'll see if this extra tax burden is significant enough that they say we've had enough and we're going to Palm Beach.
Might be I don't know, maybe be bullish in Florida, Florida office market, Texas office market. I don't know, both kind of being on the real estate side and internships. It's going to be cool to kind of see this firsthand and see where people are truly going.
Right, right. And I kind of threw this graph down here just in case any of our viewers were interested. We just have on the left-hand side, we have house supply impacts renewal rates, so people renewing their leases, and as supply goes down, people choose more and more often to stay put in their existing apartment, and that this creates rent growth. And the more people who stay, in theory, that you're allowed to raise the rent, and that spaces become really competitive. So it gives landlords the flexibility to raise the rents. But what happens is that if you can't raise the rents and rents kind of flatline, that your landlord isn't going to put any money into the building. And what happens when they don't put any money in the building is you got roaches and rats literally at some of these nicer properties, that they're falling apart, that they're safety liabilities. So I think that that's something that is not conducive. And obviously, I think maybe the bigger story is like what this means for developers who are considering building new stuff, all these office to resi conversions that we talked about, that all of a sudden the math just probably doesn't make any sense anymore because you can't raise rents.
Yeah, those are great points you bring up, and it's just reflective of the overall market conditions right now. Like when you're building out these projections and you're forecasting it, like you said, it's not going to make much sense. And something else that maybe is a little abstract, but a lot of these New York City office buildings are old and they do need renovations. Um, Maybe new developments need to be put into place, and everyone's demanding the nice amenities and things like that. So you just wonder what that world looks like if corporate headquarters do decide to leave. Again, it might be pretty tough, and there's still a great appeal to New York City and proximity to a lot of your competitors and things like that. But this is something that we'll for sure follow, and we'll let you guys know what's unfolding.
Right, right. That we will do that. But let's pivot into tech just to close out here. We have some good stories. I think maybe we'll start with this one on AI and what's this doing to different news corporations. I know firsthand, and my sister who works for a newspaper in Philly knows that this is definitely a threat of people who used to go into Google and go and click their link. I think that a good line from this article is that search engines have become answer engines. What are your thoughts on this?
Yeah, I mean, I can't say that I'm helping these websites either. It seems like it takes too much time now to scroll for the right article and click the link and
Give them
scan through the
money.
whole thing. Yeah. So, um, it is a lot more convenient when you have Google's version of AI mode that kind of summarizes things for you and spits stuff out to you immediately. And of course, ChatGPT, Microsoft is Copilot. So people are kind of they're finding their information from these sources, and it's really taken a hit on some of these websites. I know that Business Insider cut about 20% of its staff last month, and CEO Barbara Pang said that it was helping the publication endure extreme traffic drops outside of our control. And as a whole, organic search traffic to Business Insider's websites have declined 55% in the last 3 years. So this is a real issue for these websites, and I think it's something that kind of goes under the radar, but it's something that's happening.
And like one question I have for this, and maybe I can just pass this over to you because I don't, I don't want to answer it. But how do we solve this problem of that we want to make information as democratic as possible, as easy to access as possible, but yet we still want to have an independent branch of journalism, and those people need salaries, they need money, they need somebody to pay them, and that if we can all just AI search everything away, then we can totally cut them out. I just kind of wonder how we fix that.
I don't know. That's a great question, and it's something that's really tough that's going on. I know that there's been some sort of legal debates over copyright issues and what can these AI um, engines kind of take and how do they provide credit, or also looking at it from an internal perspective, what do these news websites do to make themselves competitive? I think part of it's going to come down to them. I heard people talk about email subscriptions and how if you're, say, Business Insider, you have to find a way to get your publication into people's inboxes every day. So that's something we can look at too. But as you're kind of talking about democratized information and keeping things independent, that's a whole nother, I don't know. I don't know how that would go. That would probably end up with some legal stuff that I don't know enough about. But
Mhm.
again, another tough question.
Yeah, we'll leave that to the government to solve. But instead, we have more robo taxis to talk about. We have Tesla, who I think just started one of their trial runs in Austin, I want to say, for the robo taxi rollout, which is directly combating Waymo. I think that they had a few slip ups on their rollout and had a couple accidents maybe happen or things go wire, but still, Tesla is now officially in this robo-taxi fight, which, according to article that we read, 60% of their market cap is attributed to these autonomous vehicles, and I don't know what percentage Waymo's is, but Waymo, which is part of the Google parent company, but still, an interesting fight to watch. I don't know. What have you been seeing?
Yeah, it's very interesting. Just when you look at a sheer capital perspective, Tesla's $1 trillion market cap versus Waymo's $45 billion market cap. Intuitively, like you would think that Tesla's way ahead of this race, or they have way more advanced technology, but actually Waymo's well in the lead right now. Um, so parent company Alphabet owns Waymo, and they're in 5 cities already with around 1,500 total cars. And as you were just saying before, Tesla's only in one city. Not only that, but Tesla has an employee in the front seat of all the rides that they're doing, and they're only charging $4.20 or something like that. Um, and it's just they're really far behind Tesla and Waymo's. If you go to cities like San Francisco, like this is a real thing, and they're everywhere, and they're fully on their own. And while they're still not profitable, they're much closer to it. So you just kind of have to think, is Tesla's valuation justified, and can they cover ground in this race?
Right. And I think that their real thesis here is that because their technology is superior, they're going to be able to produce this for way cheaper than Waymo is without all the mapping and LiDAR that Waymos need to get around, whereas Tesla can use AI and less cameras and be able to make this happen much more efficiently, hence the 420 price tag. And I don't know if that is a meme, which I'm sure it is, or just an accurate reflection of where the price will settle. But regardless, I think that Google today, I I bought Google recently because I'm long the stock at a 19 price to earnings compared to whatever it is that Tesla is. But I think that Google, interestingly, there's kind of a tie into this other story of like why it's trading so cheaply because people really are seeing what they think is the end of search, and that is all going to be AI mode. But I think little do they know how good Google Gemini is if you're not already on that wave.
Yeah, I mean, also to answer your question from before, Tesla's trading at 150 times PE, and Waymo, well, Alphabet's at 18 and a half. So a little different. But yeah, kind of what you were saying. I'm also bullish on Alphabet simply for this. I think this is incredible, and I might be a skeptic. I'm a little less bullish on their search engine. I think that ChatGPT is already so prominent, and people are just used to it for no other reason. Maybe I know Gemini is also very capable and well put together, but I think that ChatGPT is just what people think of when they think of AI, and it might already come out to a strong lead, and you don't necessarily have to. I don't think people are really going to be switching their
Hmm.
engine. So that's kind of the counter argument. But at the end of the day, when you're looking at Alphabet versus Tesla, Alphabet's doing a lot more at a lot less money. So it's going to be interesting to see how it folds. And people are also worried about you mentioned before how much less expensive Tesla's equipment is, and that raises some eyebrows because it's not as effective as what Waymo's doing. They're using a more radar focused thing, Waymo, and Tesla's using camera based technology, which is vulnerable to sunlight even. So people do worry about safety concerns there, but I don't know. Who do you think is going to win this race?
I got Google. I hope they or Alphabet. I hope that they can they can figure it out. I certainly don't have a lot of trust in Musk, but I really just hope that the whole project comes together at some point. We can see a world with robotaxis. But do you have a bet here?
I don't know. I'm gonna say Waymo just because I mean, they're in the lead, and there's a lot of questions about when Tesla's robotaxis are even gonna hit other cities, and I believe they have one model that's not coming out till like late 2026. So we'll see. We'll see. It'll be fun to watch that.
Right. And I would say my last thing is of thinking about how robotaxis are gonna impact real estate. I think it's gonna be super interesting if I can see a world with robotaxis and like what that means for cities where uh I know the real choke point is that we need so much parking. Everybody needs to have a car. We need to jam all these cars underground somewhere. And that if we have a robo-taxi world, it feels like that, the sky's the limit in terms of just how many people can either commute here from the suburbs or just live here without a car and be able to get anywhere they need to go. So I think that that's another thing that's really exciting.
Yeah, I was thinking about that too, like a really long-term perspective. Are people even gonna have cars? Because I've seen, I mean, this is a crazy thought, but Waymos will just be in and out, and it's very affordable. You look at affordability, that's a huge concern in New York City right now. A lot of people contribute that to why Mamdani won and kind of his campaign promises, but that's something that's a major concern and might really change the landscape. And I actually do want to pass a question on to you. What are we gonna do with all those, let's say that happens, people don't have cars. What are we gonna do with these big parking spaces?
Oh, I don't know. I don't know. Hopefully it's some awesome mixed use buildings that are casino on the bottom, office on top, or hotel on top. I don't know, we can do retail on the bottom, multifamily on top. Let's just build stuff.
Let's have fun with it. We'll ask the urban planners.
Yeah, right. Right. Okay, I think that's everything we got on the docket, James, unless you have anything to add here at the end.
I'm good. I think that was covered a lot of stuff. Happy to keep you guys updated, and we're gonna keep following some of these stories and continue our once a week for the rest of the summer. So we'll see you guys soon.
Yeah, talk soon.